Welcome back to the channel. Today we are taking a deep look at the gold market. Not just in the United States, but across the global financial system. All data discussed reflects market conditions as of January 28, 2026. This is a historic moment for gold, because prices are trading at extremely elevated levels, and global attention is fully locked in. Let's start with the global gold market. Spot gold in international markets is trading above $5,200 per ounce. At times, prices have moved close to the $5,300 level. These are levels never seen before in modern market history. Gold is not moving randomly, it is responding to global stress. Economic uncertainty is rising worldwide. Growth is slowing in multiple major economies. Debt levels continue to increase, and confidence in long-term stability is being tested. In times like these, capital seeks protection. Gold has always played that role. It does not generate yield, but it preserves value. That is why gold demand increases during uncertainty. Another major factor is geopolitical risk. Global tensions remain unresolved. Conflicts and strategic rivalries continue. These risks are not isolated. They affect global supply chains, they affect currencies, and they affect investor psychology. When fear rises, gold benefits. A third major factor is the US dollar. Gold is priced in dollars globally. When the dollar weakens, gold tends to rise. Recently, the dollar has shown clear signs of weakness. This has supported higher gold prices worldwide. International investors see gold as more attractive. Demand increases across regions. Institutional investors take notice. Central banks take action. Central bank gold purchases remain strong. Many central banks are increasing gold reserves. This is not speculation. It is strategic diversification. Gold reduces dependence on any single currency. This trend has been building for years, and it has not slowed down. Large-scale purchases create long-term price support. Central banks do not trade frequently, they buy with a long-term view. That changes the structure of the gold market. Gold is no longer just an investment asset. It is a strategic reserve asset. Now let's turn to the United States. The U.S. gold market closely follows global pricing, but it is deeply influenced by Federal Reserve policy. The Fed remains the most important driver of market expectations. Interest rates remain elevated. Financial conditions are tight. Economic growth faces increasing pressure. Investors in the U.S. are becoming more defensive. Capital allocation is shifting. Risk appetite is changing. Gold benefits from this environment, even with high interest rates. Gold demand remains strong. This is a key signal. It suggests fear outweighs opportunity cost. U.S. investors are prioritizing safety. Stock markets remain volatile. Bond markets face yield uncertainty. Gold offers balance. This explains why gold prices in the U.S. remain elevated. Another important component is gold ETFs. ETF flows reflect institutional sentiment. Recently, ETF holdings have stabilized. In some cases, inflows have increased. This suggests confidence remains intact. Institutions are not exiting gold aggressively. That matters, because institutional capital moves markets. Retail investors often follow later. Now we need to talk about volatility. High prices bring higher risk. Corrections are always possible. Profit-taking is natural. Gold is not immune to pullbacks. But so far, there is no sign of panic selling. That is critical. It tells us the trend has not broken. Markets are debating direction, but confidence has not collapsed. Globally, gold is acting as a risk barometer. When uncertainty rises, gold strengthens. When stability improves, gold cools. Right now, uncertainty remains elevated. That keeps gold supported. Some investors are asking if this is a bubble. That question is reasonable, but bubbles require extreme optimism. What we see now is mixed sentiment. Bulls and skeptics coexist. That balance actually stabilizes the market. Universal optimism would be more dangerous. This brings us to the psychological level being discussed, $6,000 per ounce. This number is not a forecast, it is not a promise. It is a psychological reference point, a level that sparks debate. Some see it as impossible, others see it as a logical extension of current trends. What matters is that the market is talking about it. Discussion itself influences sentiment. Sentiment influences positioning. Positioning influences price. Gold has always been driven by belief. Belief in safety, belief in value, belief in protection. Historically, every major gold rally was controversial. This one is no different. The difference today is scale. Global risk is larger, debt is higher, confidence is thinner. That is why the conversation is louder. For individual investors, discipline is essential. Emotional trading leads to mistakes. Headlines amplify fear. Fear amplifies volatility. Understanding context matters. Gold can protect, but it can also punish impatience. Position sizing matters. Risk management matters. Time horizon matters. At this moment, data shows strength, both globally and in the United States. But markets never move in straight lines. Corrections can happen anytime. Stability can return, or risk can increase further. That uncertainty is exactly why gold exists. This video is not a prediction. It is not financial advice. It is a snapshot of reality, based on current data and current market behavior. Now let's open the discussion with gold trading above historic levels. What do these prices signal to you? Are they a warning, or a form of insurance, or simply a reflection of global imbalance? And when you hear the number 6,000, what is your reaction? Confidence, doubt, or neutrality? Every reaction matters, because markets are built on collective belief. Leave your perspective in the comments. Are you bullish on gold long-term? Or cautious at these levels? Or watching from the sidelines? There is no single correct answer, only informed perspectives. If you found this analysis useful, please like the video, subscribe to the channel, and turn on notifications. We will continue tracking global markets with data-driven analysis, not emotion, not hype. One final question before you go. Gold is already above historic levels, and the number $6,000 per ounce is being talked about more and more. Not when, just if. Do you believe gold will ever reach $6,000 an ounce? Yes or no, and most importantly, why? Drop your reasoning in the comments. Let's see how divided this market really is. Thank you for watching. Stay disciplined, stay informed, and always think long-term.